Have you ever wondered what really separates the good traders from the absolute legends? You know, the people who don't just make money in the markets, but who achieve things that seem, well, almost impossible? Today, we're going to peek inside the minds of these very legends. Our guide on this journey is Jack Schwager's incredible book, Market Wizards. It digs into this one huge question. What is it that makes these super traders so successful? Is there some kind of secret formula they all share? Or is it something else entirely?
And just to give you a taste of what we're talking about, one of the traders in the book, a guy named Michael Marcus, took his company's account and multiplied it by 2,500 times. That happened over just 10 years. To put that in perspective, that's like turning $30,000 into $80 million. It's just staggering.
Now here's the fascinating part. After talking to all these incredible traders, Schwager realized the common thread wasn't some magic indicator or a secret algorithm. Nope, it was their mindset. It was their principles, their discipline, and their entire attitude towards risk.
Which, of course, brings us to the big question, right? Are these mind-blowing returns just a case of someone getting incredibly lucky, like winning the lottery over and over again? Or is this a skill that could actually be learned? To figure that out, we're going to follow the story of one trader, whose journey teaches us pretty much every lesson a market wizard needs to learn.
And you might be surprised where this story begins. It starts with total catastrophic failure. Because as we're about to see, before you can ever learn how to win big, you first have to learn how to lose.
So let's meet our main character, Michael Marcus. This guy was brilliant. A Phi Beta Kappa graduate from a top university, an academic superstar. But when it came to the markets, he knew absolutely nothing. He started out with just $1,000 and a so-called boy genius advisor who promised he could double his money every 2 weeks.
So how did that go? Well, this pretty much sums it up. His first 8 trades, all losers. Every single one. He completely wiped out his first stake of money, and then he wiped out a second one. So much for that boy genius, right?
The absolute low point came from a can't possibly lose trade in pork bellies that his advisor dreamed up. It was so fundamentally flawed that after it blew up his account, Marcus remembers his advisor literally pounding on the quote board, screaming this exact line. It was a painful lesson, for sure, but a really important one about humility.
But believe it or not, the worst was still to come. After getting lucky during a corn blight one summer, he managed to build his account up to $30,000. And then he did the one thing you should never, ever do. He borrowed more money, this time from his mother, and he bet it all on a rumor that the blight was coming back. It didn't. He lost everything.
Okay, so at this point, he's completely broke, he's demoralized, he's at rock bottom. But this is where something finally started to click. This was the moment where all that painful failure started to turn into some hard-won wisdom.
He ended up meeting a legendary trader named Ed Sakota, who became his mentor. And Sakota taught him these classic, timeless trading rules. Cut your losses, ride your winners. They sound so simple, right? But as Marcus was about to find out, they are incredibly hard to follow when your money and your emotions are on the line.
So Marcus scraped together the last $700 he had to his name. This was during the Nixon price controls, and he noticed something weird. Plywood futures were trading higher than the legal price ceiling. It was a huge market mistake. He spotted his opportunity and he took it, buying just one contract. And that one trade, it was a monster. The market just exploded in his favor, and he brilliantly added to his position, turning that tiny $700 stake into $12,000. This was it. This was his first taste of what real skill-based success felt like.
So, what do you think he did with all that new money? He immediately made the exact same catastrophic mistake that wiped him out before. He took all $12,000 and put it all on one single idea in the lumber market. He figured, hey, lightning can strike twice. It did not. The government suddenly cracked down and the lumber market crashed. In a heartbeat, his account went from over $12,000 down to just $3,800. He said it was the worst 2 weeks of his life, staring into the abyss, about to get wiped out for a third time.
He just barely managed to hang on, and the trade did eventually turn around. But the lesson? Oh man. That lesson was burned into his memory forever. This quote right here, this was the real turning point. It's the moment he finally understood that risk management isn't just important, it's everything.
So out of all that failure, all that pain and near disaster, Marcus forged a set of core principles. And these are the rules that would eventually guide him to become a trading legend. Let's break down what he learned.
His rules, born from all that failure, are actually pretty simple, but they're incredibly powerful. First, you never ever bet the farm. He says you should risk less than 5% of your capital on any one idea. Second, you always have to know where your exit is before you even get into a trade. That means using a stop loss. And finally, the classic mantra, you have to let your winners run and you have to cut your losers short, no questions asked.
He also learned something else that's absolutely critical. You have to trade in a way that fits your personality. Trying to copy someone else, even if they're a fantastic trader, is just a recipe for disaster. Why? Because you won't have the same conviction they do. When the trade goes against you, you'll panic. You'll end up getting the worst of their style and the worst of yours.
So how did he know when it was okay to be a little more aggressive? Well, he had a checklist for what he called a perfect trade. He looked for times when everything lined up perfectly. First, the fundamental story had to be there. Second, the chart had to confirm it. And third, the market's mood, its psychology, just had to feel right. When all three of those things clicked into place, that's when he knew he had a real opportunity.
But you know, in the end, the wisdom from these market wizards goes way beyond just charts and numbers. It's about psychology, it's about balance, and it's about your fundamental view of the world.
Marcus realized that if you want to last in this game, you can't let it become your entire world. You have to have other interests, other things you care about. Without that balance, the constant pressure just grinds you down, leads to burnout, and forces you into bad decisions. It has to be fun, not a torture chamber.
He also really understood the dangerous mental spiral that comes with a losing streak. It's not just that you're losing money, it changes how you think. A string of losses makes you pessimistic, it makes you scared, and that just leads to more mistakes. What's the best thing to do? Take a step back, trade smaller, or maybe even stop trading for a bit just to get your head straight.
But maybe the deepest lesson of all came when he was asked about his most fundamental belief. He quoted Albert Einstein, saying that at some point, everyone has to decide if they believe the universe is a friendly place. And maybe that's the ultimate secret of a market wizard. It's not just about mastering the markets, it's about mastering yourself.